Welcome back, everyone. Joining me now for a closer look into the South African economy following the release of GDP numbers earlier is Maarten Ackerman, who is the Chief Economist and Advisory Partner at Citadel. Maarten, thanks so much for your time. I mean, we were talking off air about these figures and exactly what 0.8% growth in 2018 means for ordinary South Africans like you, not so much you, maybe me and other ordinary South Africans.
No, I think, there's always a positive and a negative side to any of the numbers. The numbers are unfortunately still very soft. The population is growing at 1.7%. So any number that's below that actually means that the average South African is getting poorer. We're not moving ahead in terms of that. So in that kind of environment, until we get economic growth north of 1.7, probably 2% growth, that's only when we'll start making a difference in terms of creating more jobs, and as a result of that, improve the whole consumer base. So although the numbers are positive, and we're glad about that because we are leaving the recession behind, and if we can continue on this road, then eventually we'll get to higher numbers. But per capita, per person, it is actually not that great yet. And it's been that now for the past 5 years. So that's the one side that, despite the positive numbers, is still a concern. If you look at the expenditure side of the numbers that came out today, household expenditure was actually quite strong for the last quarter, 3.6. So that is an indication that, although the consumer had the VAT increase last year, we are dealing with high unemployment. We had a number of petrol price increases last year. The retail sales, and especially the sales around Black Friday, supported that healthy 3.6%.
But you know what the problem with that figure is? I mean, Nedbank's results out today saying that much of the spending, particularly from the consumer side, was driven by credit.
That's not always bad. In any economy, you need some healthy credit growth. Because healthy credit growth, as long as we can service the debt, enables us to further stimulate the economy. There's like a multiplier effect on top of that. So that's not always bad, but if you get into an excessive debt environment and the consumer can't service that, so that now brings us to the second part about interest rates. So given the fact that the numbers are still weak, the economic numbers we saw today, 0.8 for 2018, and the fact that inflation is not running away. So inflation is very close to the middle of the target. That actually implies that another interest rate hike this year is unlikely. So that's some good news for the consumer.
Sure.
So yes, we're still dealing with the higher taxes, the higher unemployment. We're getting another petrol increase soon. But if we're in an environment where inflation is behaving and we don't see another interest rate increase, that at least allow consumers to have a bit of breathing space. And even if spending is taking place on credit, it's not costing you more every month. So that's the other side of the coin, to say, well, in a weak economic environment and inflation behaving, it's very unlikely that we will see further interest rate hikes.
A welcome relief, particularly for many motorists who will be rushing to the pumps this evening to avoid, or to get some relief following the increase in petrol prices tomorrow. But Maarten, you're talking about the fact that we need around, 2.53% growth rates to make South Africans just a little less poorer each year. And all of that, it's hinged on the private sector. And the private sector right now is still not confident enough, I think, to put money in this economy. I was chatting to the chief economist of Alexander Forbes earlier. He believes that the reforms made in the past 12 months, particularly in the mining sector, should bode well for private sector investment in 2019 and therefore possibly economic growth and therefore even jobs. Your view?
Yes, fully agree with that. I think that, for the past 5 years, we haven't seen a lot of investment going into the economy. And if you don't invest, whether it's local companies or foreign companies, then you don't create capacity. And if your main sectors like mining and manufacturing is not growing, we're not creating jobs, we don't collect enough tax, and therefore the government is in a fiscal squeeze. So all of those things are working together. So the past 12 months with the new administration, they've done a lot to actually rebuild confidence and trust, but it is early days. A lot of the foreigners are saying we committed, if you go back to the investment summit end of last year. So the money is in the pipeline, but I don't think we will see any of that money flow until maybe after the election. No. And then when we get certainty in terms of will we be able to implement the policy that's now currently on the table, and get clarity on things like still the land issue, property rights, Eskom, You know, how will the restructuring go? And even if we get the financial position of Eskom sorted out, you know, to really get to 3.5% plus economic growth, get foreigners and locals to be willing to invest in the economy, they also want to understand that there will be reliable energy sources, because otherwise you can't manufacture. So all of those things are the structural issues that we spoke about, and that will take a bit of time to fix. But I fully agree that, you know, back to the mining indaba. So the feedback from the mining indaba was actually quite positive. And they in fact said that over the past 10 months they've engaged with government probably 20 times more compared to the past 10 years. So there's definitely a much better working relationship between the two sides. Last week Vendata opened another zinc mine. So those things are coming, and that's why I'm saying that, you know, it's still a long way to go, but if we can continue down this road with the right policy, then eventually we'll get to the high growth, and that will be good for most consumers out there.
The right policy that we actually implement.
That's the implementation of that.
That's the key challenge, some would say. But Maarten, thanks so much for your time. Of course, that was Maarten Ackerman from Citadel there, unpacking South Africa's 2018 GDP figures and also walking us through the outlook for the economy this year. Guys, thanks so much.